Thank you very much, Chris. It was great. It was a great opening for the conference. For those who are joining us, my name is Alexy Khrabrov. I'm the founder of Rethink Trust and By the Bay conferences. Welcome. So our second keynote speaker is Mariana Go. She is Global Program Manager for DLT Technologies at ING. And we're very happy to have one of the global leaders who is a local company. ING has actually a history of collaboration with By the Bay events. ING is, for instance, one of the strong users of Scala programming language, which is used in Spark. Spark is written in Scala, Apache Kafka is written in Scala, and ING has strong expertise in implementing microservice architectures and scalable systems, data systems in Scala. So they send speakers regularly to our flagship conference, Scale by the Bay, which is held in November in San Francisco. And this year we'll have again representation. So we knew ING as a technology leader in addition to being a finance leader. And we found Mariana has done some really interesting work. You should look at the blog post that ING posted. From my understanding, they approached the area exactly as we approach this conference. They identified some verticals, they saw what the problems are, and so they really went into a proactive way to solve this. So very happy to have Mariana. Before she takes the stage, I'd like to invite folks in the back. Please join us. We have a lot of, we don't have a sound barrier here, so we ask everybody during the talks to please keep your conversation volume low. We have the whole second floor. If you see around here, you see the curtains. You can take the stairs on both sides of the common area, and you can go to any of the dozens of rooms for meetings, which you're welcome to use, right? So we please ask you to be cognizant of the voice carrying through the curtains from the common area to here. And with that, I give the stage to Mariana. Welcome.
Thank you. Hi, everyone. How are you? My name is Mariana Go. I'm the program manager for ING, for blockchain technologies, actually. And the reason, or actually what I do in a normal day, is to sit with different business lines to see actually how blockchain can help us deliver new added value services to our customers. Right? This may be in Amsterdam, this may be in a different location, for example, but as you can imagine, different markets have different needs, and therefore we are there to help different business lines to create these new products. We started as ING in 2008, more or less, looking at obviously what was going on with regards to Bitcoin, right? There was the release of the white paper. Some people was enthusiastic personally. And then, more or less in 2014, the first member, actually, of the exploration team, as we call it, started, gathering interest internally. They started looking, at who actually was interested on the technology, who actually was already buying Bitcoin, who was already maybe doing something with mining, or what was the interest from the people, actually, internally within ING to research this technology further. In 2014, more or less, is when a lot of people gathered. 10 people actually were part of this exploration team. And then the exploration team started looking into what actually this technology could mean for ING and for the things that we actually do as a bank. In 2015, more or less, people decided, this exploration team decided that actually the technology could be really interesting for ING. The reason behind that is, as you can imagine, as ING, we have a ledger. We have, we have to keep record of those transactions that our clients do with other parties, right? And that record of transactions is our own version of that history. And then another party will have their own version. And then you have fragmentation on those ledgers. You have two different stories, right? And blockchain was coming actually to solve that problem. Yeah? How can you look at the same time at the same information without having a third party actually telling you what the truth of that transaction was? So then we decided in 2015 to join R3, which was a consortium form of different institutions in order to research what blockchain could do in different industries. This is not only for financial institutions, other industries also join, for example, health, for example, energy, and so on and so on. And then these different institutions started to research what blockchain could mean for them. In 2016, we started actually with exploration, hands-on. That means we set up a team of engineers. It was not like a huge team. It was only 8 engineers, for example, that really proved, to be quite good at, for example, making some smart contracts in Solidity already, starting to research what Hyperledger was doing, started to research what other blockchains were doing. What we did in this year was we started mixing different asset classes, right? So, for example, maybe a bond with one specific blockchain, maybe an interest rate swap with another specific blockchain, and see how those assets could actually fit in different blockchains. Because each one of them was evolving in a different way. Each one of them would have specific hurdles. Each one of them would have specific ways of modeling that data. And that was actually a really important learning point for ING, right? That sometimes you would have one blockchain that will fit better and a specific asset class than others, in terms of transaction throughput, in terms of when the transaction finality was happening, and so on and so on. So in 2016, we delivered over 30 proof of concepts, I believe it was, in different areas of the bank. For example, in payments. We also delivered some in financial markets, bank treasury, lending, identity, KYC, and so on and so on. And then we decided, OK, what we have learned so far is that this technology is still evolving, and it's evolving really fast, but it has specific hurdles. It has specific points that we need to take in consideration in order to know where can we really add the value at the current state of the technology. So we decided to leave proof of concepts aside. We chose 5 different cases that we believe we could actually move forward towards delivering a real value proposition. And then we started what we call the year of the pilot. The year of the pilot was because we delivered that year 6 pilots actually in production with different technologies to see how they would fit to serve our clients in a better way. So 2018, we believe is going to be the year where we're going to go in real production in terms of delivering those products into a commercial cycle. The reason behind the year there, the whole year, is because, as you can imagine, as financial institutions, we really need to make sure that what we are delivering is tamper-proof, right? That, actually, the products that you are, as clients, using and that are offered by all these different groups that are working into delivering something on blockchain is actually something that you can trust and that you can actually use without having to worry. I bet you already know this, but finance was the first industry that actually picked up on blockchain. I already explained a little bit why, right? We saw the difference, in the way ledgers were being handled at that time. And we have seen a pickup, actually, not only on the banking and finance industry, but other industries are starting to catch up. For example, we see that insurances are starting to do their first proof of concepts. They're a little bit lagging behind in terms of experience. But they're starting to catch up as well. Healthcare is starting to have as well some of the cases. I don't know if you have heard about the blockchain baby, right? Which was delivered in Holland, actually, and was, how can you track, actually, the administrative part of having a baby that is born in the Dutch society with, for example, the Kraamzorg, etc. You see media and entertainment as well being one of the industries where disintermediation is also happening heavily. And you see other industries like energy and utilities having already their own conferences, having already their own proof of concepts and their own things delivered in production, right? But trust. If you really think about that, and if you think back, obviously, blockchain was born because of the lack of trust in financial institutions. We created the crisis in 2008. Maybe most of you, by looking at the faces, might not remember that because you look quite young. But indeed, there was a huge crisis worldwide, right? And then that crisis actually was the one who made that, banks lost the trust on the people. And then the rise of the cyberpunk community, right, that wanted to take over and said, OK, I don't trust banks anymore. I don't trust the governments anymore. I want to have actually, access or being able to send money peer-to-peer without having a third party involved there. So I think it was an awakening for the financial industry. We changed not only, obviously, the fact that we do things different, but we also changed the way we deliver services. right? As ING, you have probably seen, we have a huge amount of programs going on internally to change that culture, to change the way we look at our customers, to change the way we actually do things internally, and to change as well, hopefully, the message, and to reinstate the trust within the society for the financial industry again. So going back, thinking about it, blockchains were not created to serve financial institutions. On the contrary, right? And that means that they were designed without the requirements that we currently have. We are a regulated financial institution. We need to comply with a lot of requirements for a reason. I'm not saying that those are bad. You know, they are there for a reason. They are there to protect ourselves and to protect you guys. And therefore, we needed to help as well for this ecosystem, the ecosystem of distributed ledgers, the ecosystem of blockchains, to evolve so then they could also cover our requirements. So thinking on the history, you can see all the way in this side that cryptocurrencies, for example, like Bitcoin, were the first ones created, right, that had blockchain. Then everybody started looking into, OK, Bitcoin is only one of them. We start creating other type of blockchains that have different things, that can solve different problems, and that have different functionality. And as the time evolves, then we start really talking about distributed ledgers. This is actually the technology that ING is using. We're not using blockchains. We're using distributed ledgers. And there is a really significant difference, right, in the way, for example, consensus is reached, in the way these technologies are deployed, and as well in the way they can solve different hurdles that we currently have with specific blockchains. So we believe strongly that financial industry is moving away from blockchains into actually distributed ledger technology. And if you really think about the potential of it, I mean, besides the use cases, the typical use cases on operational simplification and reduction on liquidity and a better collateral and so on, if you think about it on the macro ecosystem way, you see, for example, that we could think of wholesale banking and retail, as two parts of the quadrants. And then you can think about distributed ledger technology to help, for example, deliver distributed infrastructure, like in the music industry, like, for example, Uber could also use. You can have a store of value, like the ICOs, like Bitcoins, like cryptocurrencies. Or you could also have, for example, a new technology stack or creation of new asset classes, what I was mentioning before, right? So how do you tokenize an asset that is already existent, and how would you deliver that value to the customers? What kind of rules will they need, and what kind of problems are you actually solving? And in those two quadrants is actually where most of our experimentation took place until now. So I was mentioning, OK, we lost the trust. We really need to regain it, and we want to regain it. And in this course of the last probably 10 years, we have been working really hard as ING to change that, right? How are we doing it? We're doing it by creating an innovation culture. This is really, really important to understand, because the way we look at things and the way we do things right now is not anymore by saying, oh, I'm Mariana, I know it all, and I can tell you that the best product that I'm going to build is the amazing one, and you're going to want to buy it. No, no, no. That's not the way we look at things anymore. We have a client-centric culture where we really have to go and interview a lot of clients on what exactly are their needs, what are their problems. We involve them in what we believe that is the creation of a minimum viable ecosystem. So instead of minimum viable product, remember when you do an iteration of a specific product and then you release it to production, we do the same but with a bigger ecosystem. So that means you evaluate a value chain in a specific asset, and then you get involved different peoples of that value chain in order for you to deliver the value that the whole ecosystem is looking for. That's the only way that you can actually influence for the changes that you need, and that's the way that you can actually solve the problem that is relevant for everybody, and not only for financial institutions, for example, right? A proof of that is, for example, the launch of the pilot that we did. We call it Easy Trading Connect. It was a winner of an innovation bootcamp. And we did two pilots on this. The first one was with a cargo of crude oil that was on 2017. It was done on Ethereum. And that cargo was going from Africa all the way to China, and it got sold 3 times on its way. In that case, we, for example, included people in this pilot, such as oil companies. We included, for example, as well, different departments, right, or different regulators, the agents. And we created this distributed ledger. So then the energy sector could actually start trading those commodities on the blockchain. So it was not a thing imposed by ING, but it was actually the creation of a whole group or consortia of people, that saw the added value of this technology, and we put it in practice. But as you may remember, maybe you know, but in 2017, more or less in that time, which was February, Ethereum didn't have yet a way to handle confidentiality and privacy, right? So if you would to deploy, for example, a transaction, then all the nodes that are validating that transaction will have insight into that specific transaction. So obviously, we did it in a private way, in a private group, let's say in a private blockchain, but still the validators' nodes would have access to that information. So we have to redo that, and for that, we use Quorum. So the second transaction that we did, and was launched actually in January this year, in 2018, was with a cargo of soya beans. And once again, we included, for example, the Department of Agriculture in the US. It was such a huge effort that actually even it was commented on the Senate of US, as a proof point on how this technology was achieving that different people within a value chain were actually arriving to a consensus and were actually cooperating with each other instead of actually being competitors from each other. We did this in cooperation with another bank, Société Générale, and then we also included others like ABN AMRO, and now we're in conversations with more banks in order to create a bigger ecosystem in that sense. Well, we're talking about reinstating trust, and a huge part of it was as well regulators, right? Regulators need to overlook at what we are doing. They also need to learn what we are doing. They also need to learn how this layer technology will impact what they regulate currently. And they're in the path of learning. And I must say, for example, that the Dutch regulator is quite advanced in the understanding of this layer technology. They're one of the ones that are really willing to listen. They ask really smart questions. And they have been doing their own pilots themselves. But still, they need to happen a little bit of shift, right, in those regulations. There are parts that still need to evolve. For example, if I were to do the trade case that I mentioned before, even though if the Dutch central bank would be like, oh my God, I totally understand smart contracts, and it's cool for you, ING, to do it in such a way. If something goes wrong, and if I go to the court of law in another country and I tell them, hey, but the transaction was done by a smart contract, the judge will tell me, yeah, sorry, but in here, smart contracts are not legally enforceable, right? So the shift doesn't need to happen in a local way, but it needs to happen in a global way as well. And we believe that by creating those minimum viable ecosystems is the only way that we can actually leverage each other to make the push and the shift on that specific piece of thought. Another important thing is the liability sharing. So for example, I believe IBM was talking about, what do you do with identity, right? Some regulations in certain countries are, pro, let's share identities from each other, and then you don't have to bother the person to go to the branch to identify themselves, and then you can give them the bank account, for example. But in some other countries, the same regulation is interpreted in different ways. And for example, in Holland, we're not allowed to do that, right? Me, as ING, I need to check that whoever is doing that transaction is who he says he is. And I cannot rely upon the KYC or identification of a third party to tell me that actually you are who you say you are. I have to do it myself, otherwise I am liable. And that shift on mentality also needs to happen in order for us to really deliver, a true identity on distributed ledger. And last but not least, obviously the central bank cryptocurrencies or central bank currencies issued by central banks, so then they're backed. Imagine, for example, that I would give access as financial institution to crypto assets, right? And then with the volatility, maybe my corporates are in, a deep problem because suddenly there was a price on the change, and then what the product was worth 1 minute ago now is worth totally something different. That's the reason why we cannot rely upon cryptocurrencies at this stage, and that's also one of the reasons why we do not offer cryptocurrencies within our services, because we are regulated, and we need to make sure that whatever we do is stable and is properly overseen by the regulators. We also did something, for example, with regards to KYC. As I explained before, the fragmentation, on the regulation makes that actually sometimes you can deploy something in a specific market, but then you cannot deploy it in another market because that interpretation is totally different, right? So then how do you really achieve a distributed ecosystem when still there's a lot of fragmentation in that regulation? We need to push for that together, and we will only do it if we do it together, really. The technology keeps evolving. There are new features, there are new items, there are new things being developed as we speak. I think on a weekly basis using new releases from different technologies, right? And different ways to tackle the hurdles that we currently see as a financial ecosystem. One of those is scalability. We need to ensure that the transaction throughput from different cases is there. If you think about a payments case, you might need, for example, a transaction throughput of 5,000 transactions or 2,500 transactions per second. But maybe in mortgages, you don't need that transaction throughput. Right? In mortgages, how many mortgages can you give a second as a bank? So then there are places where the technology is already of value, and there are places where it still needs to evolve a little bit in order for it to really deliver the value that you're looking for. And how can we help that evolution? Well, for example, you have also interoperability. We already know that different ledgers are going to exist there with different assets, right? And those ledgers are going to have to talk to each other. How are we going to do that? How are we going to ensure that actually the data provenance is not being lost within the modeling of the different assets in the different ledgers? We're also working with different institutions on that. And last but not least, privacy and confidentiality. We actually open sourced last year an algorithm to ensure privacy and confidentiality. It was born by, for example, the case that I mentioned before on the payments. I don't want someone else, which is validating this transaction, to know what is happening. And therefore, we chose zero-knowledge proofs. And what we did was increase the performance, and we did it non-interactive. So what you can do is you can hide a number within a range of numbers with it. Meaning, let's say, I'm Mariana, and then I want to go to Albert Heijn, and I want to buy a pack of cigarettes. But I don't want Albert Heijn to know that I'm 40, because I'm dating a guy that is next to me, and maybe he thinks that I'm too old for that. And maybe I don't want as well Albert Heijn to know what my birth date is. So therefore, I could tell them, OK, I can buy these cigarettes because I'm above 18, without them learning what my birth date is and what actually my age is, right? But you can do this in a lot of different aspects. For example, I can also apply for a mortgage without telling them what actually my salary is, right? Or you can also hide, for example, the location if you are doing a tracking for an insurance or for an Internet of Things type of container transaction, You can also hide, for example, the fact that you are applying for a specific payment and you don't want to disclose what the balance of your bank account is. So we thought, OK, as financial institutions, most of the times we're going to talk about numbers, whether that's a loan, whether that's a payment, whether that's a specific location, whether that's a trade. So how can we improve actually this technology to make it perform better? And what we did is we open source it. We open source it because, again, we believe that we have to create that ecosystem. We don't know best. And we needed as well different parties to help us test this, to help us whether they have maybe better ideas on how to improve it, maybe they have better ideas on how to apply it. And that's the reason why we actually open source it instead of keeping it as patent or private. So in a nutshell, ING has delivered until now 44 proof of concepts, including, for example, 6 live pilots. I mentioned 3 already of them, but we have done as well some transactions with HSBC. We have done, for example, an atomic swap in a high-quality liquid asset exchange, which was, by the way, the first legally enforceable transaction in the ecosystem. What I mean by that is, remember when I said that if you go to the court of law and they say, OK, this was a smart contract in here, that's not legally enforceable? Well, we included, for example, in that sense, custodians of those assets, right? We included as well observatory notes from regulations. And then they could actually vouch that the transaction was happening at the swap. The ownership of those assets, the high quality versus the non-high quality liquid assets, were being exchanged real time. Right? So the transaction was legally enforceable. We do this by the creation of minimum viable ecosystems, again, adding different incumbents from different value chains in order for us to really have learnings as an industry rather than in silos. We have created what we call the Blockchain University, where we actually train different people inside ING internally to see what can this real ledger do for them, right, in their day-to-day. How can actually that impact their day-to-day, and how can it improve as well the services that they are currently rendering to our clients. We open source solutions, such as the zero-knowledge range proofs. And last but not least, we also work on different industry collaboratory groups. If we don't do this as an industry, then we are nowhere, right? This is a network effect type of technology. And that's also what is cool about it. So what we believe is the way we can actually regain that trust is by capitalizing on the industry knowledge. There's a lot to learn out there. There's a lot being created. There's a lot being talked about. So then you really need to, talk about it with your peers, with different people within the industry. You don't have to know it all by yourself or learn it all from scratch. I have a very strict evaluation on what actually you do and where do you put your resources. If you are going to do something, think about, are there any regulatory hurdles, for example, or any laws that we will have to change? Maybe there's something that you can do that can already deliver the value without you having to wait for years, for the shift to happen. And last but not least, design always exploratory partnerships in an ecosystem type of way. The insights that you can get from peers, the insights that you can get from people that looks at it in a different perspective are huge. So don't underestimate that value. Yeah? Thank you very much, guys.
Thank you, Mariana. So at this point, we have a hard fork in the program. We have a 10-minute coffee break. If you guys need to use the restrooms, they're in the back of the building. But also, they're on the second floor. So there is a workshop track which starts with Hyperledger Fabric workshop taught by Arnaud Lehorst, who is a core member of the Hyperledger team, and he's with IBM. So if you want to get hands-on, there is a 2-hour block on Hyperledger Fabric, which begins on the second floor at the Berlage Saal, which is behind the screen. So you need to go to the back of the building. You need to ascend the stairs, and I highly recommend that you do that. Then you can peek through the curtains, you can get an amazing view of this hall, and then you go all the way back, and the workshop is there, and this is where we're going to have the whole day. For instance, if you want to understand why you should build your blockchain and functional programming languages like Scala, you need to attend the Topol workshop exactly for this purpose. Please familiarize yourself. We have a whole second floor. We have a lot of meeting rooms which you can use for yourselves. You can sit there and work on your laptops. You can have conversations. It's really an amazing facility for separate conversations. I highly recommend you guys check it out. We have unlimited, continuous, and uninterrupted supply of coffee, which is going on with all the other things at the bar. So we don't have coffee just during the coffee breaks. We have it continuous. That's a hallmark of all by-the-bay events. Please take advantage of this. And we are gathering here back at 10 after 10 sharp. So please be on time for our next series of talks.